Hello everyone and welcome to this interview with CEO of Alcadon, Sonny Mirborn. We're going to talk about the current situation in Alcadon a bit and the outlook going forward. But I guess we can start off with, for those that are not familiar with the company, can you just give a short rundown of the operations and your market position within what you do?
Sure. We're a company present in the field of network infrastructure, which is basically connectivity or everything you need for connectivity to work or enabling the transfer of data, basically. Within that field, we're present in the data center segment, the cabling segment, which is basically connectivity in offices, hospitals, or any type of property. And of course, FTTX, which is quite important for us as well. So that's basically where we are present. We are a distributor. We've spoken about that before, but we represent and partner up with perhaps over 200 suppliers or partners of ours, some of them world leading within their field. But we also have production and our own product development capacity. And I think that's something that our customers really value, that we have that kind of flexibility.
Okay. And as a distributor, what do you do to sort of stand out within that space? Because it's typically seen as a simple middleman position in the value chain.
Well, if you compare us with the average distributor, you can say that they often represent one or two manufacturers, international manufacturers. We have over 200, so our portfolio is significantly wider. Also, we do have this production and product development capacity, which most distributors do not have. Compared to manufacturer, also we are quite much larger within network infrastructure, and compared to a wholesaler, we work much more with solution selling and developing solutions with our customers.
Okay, and can you talk a bit about the demand situation at the moment within the different verticals that you operate in that you mentioned?
Well, I think we should first start off with what drives our industry, and that's basically data growth. And data growth is enormous. It's like 50% a year almost, and that's due to the emergence of Internet of Things, streaming, people working from home or remote working. So that basically affects us a lot, and it forces us to have more storage capacity for data, which is data centers. It requires that we use fiber, new antenna solutions like 5G, and better solutions for connectivity indoors. So that drives our industry. Now, looking at the current situation, I'd say data centers still continues with very, very strong growth rate. Structured cabling or cabling for indoor connectivity grows at about 4 to 7% a year the last 20 years, and that trend basically continues. That's what you can see. We have some offsetting market trends within FTTH, which is part of outdoor connectivity. And what we see there is basically some postponed projects in particularly the UK and Denmark, but the market is still growing quite substantially in Germany, for example, the Benelux region, and even in Sweden.
Yeah, and how would you characterize the long-term outlook, given that, as you mentioned, there are these underlying drivers underpinning the entire business?
In the long run, you could say that data growth basically underpins the long-term growth rates. And as long as we have a data growth, we're going to have a growth in network infrastructure industry. That's for sure. So we're not going to see any particular strange trends there. That is going to continue.
Okay. And within the space, where is it that you want to take some extra ground? Perhaps if it's a certain product category or a certain geography that you would like to specifically focus on?
Right now, we are focused on the Nordic region, Germany, Benelux, and UK. And the last 4 years, we changed our organic growth structure quite substantially by entering into these markets, where especially the data center and the FTTH segment is growing quite substantially. So these are among the segments that we really focus on. And we have been focusing on purpose on these three segments where we have our core competence.
Okay. And historically, obviously, this has been a combination of both organic growth and M&A. What should we expect going forward on the M&A front, given that we are in a bit of a different environment in terms of interest rates and perhaps lower demand in some of the verticals?
We're not afraid of the lower demand because we see that it's only in perhaps one segment in a couple of markets, so we don't view that as a major issue. But on the other hand, our net debt EBITDA target is to be between 2 and 3, and today we are slightly above 3 if you include IFRS 16. If you exclude it, we are at, I think 2.7 or something like that. So we're close to our targets, but given the interest rate costs right now, I would feel more comfortable being below 2.5 because that would change our interest costs quite substantially. But we can handle a strong leverage for sure. But still, we've never had such a nice pipeline of acquisition targets as we have right now, actually. We have been working on this pipeline for several years, and right now we have a lot of interesting opportunities. These are basically strategic acquisitions that we're looking at, companies with strong EBITDA margins, plus 15%, strong cash flow conversion. I would say rather low multiples, around 5, return on capital employed of around 20%. So it's good acquisitions that we're looking at, and we know for a fact that most of our owners really want us to focus on continuing to do value-add acquisitions.
So the financials sound great on the companies in the pipeline. What can you say about the operational side? What type of companies are you looking at without getting into too much specifics?
We are focused on companies that are within the segments where we are focusing on, the core competence that we already have, because we understand those companies much more, and we see the synergetic capabilities between us and them much more clearly. And to a large extent, we are already cooperating with these companies in several markets. So that's basically what we're looking at.
Okay. Can you give perhaps an example from one of your older acquisitions on how you've managed to realize these synergy effects?
Yeah, I can say just the Danish acquisition that we did of 66 International. We helped them scale up operations in Germany, and with the muscles of the whole group, they were able to take it a few rather interesting large customer agreements a few years ago that are now starting to be realized. But we also helped them start up a capacity of working towards industry, data centers, the installation market, and how do you say, merge away from only the fiber side and be a more broader business. So that's one of the things that we have done with one of our acquisitions.
Okay. And can one assume that you're doing a similar thing with your recent or fairly recent UK acquisition, which are very strong within the data center side?
Yeah.
Is that spilling over into the rest of the group, or should we expect it to?
I can say it's going both ways. We have helped them add a few distribution rights that they didn't have before, and they have helped us with that as well. So we are seeing those synergetic cooperations a lot between us and the UK company. And over time, I expect them to be fairly married into the group, which has already started to happening. And I think that's partly why we can see their profitability has gone up quite considerably since we did the acquisition as well.
Okay. And perhaps looking at a bit more long-term on the outlook side, first of all, you have a vision for 2025 that is clearly stated what you want to achieve. Can you just, first of all, outline what those targets are and how you are going to reach them?
Well, we have quite ambitious targets. We still think they are realistic. I mean, over a business cycle, we are to achieve about 20% a year in top line growth, organic plus acquisitions, and we expect an EBITDA margin of about 10%. So these are our overall targets, and we have achieved them historically, so we think that we can continue to do that. I think going forward until 2025, the main focus is to continue to grow, focus on cash flow conversion and reaching these EBITDA margin targets, which we expect to gradually reach within the next 2 years. So we think they are realistic, and it involves to some extent to continue to do acquisitions as well, even though might not as large as Network Center was.
Yeah. Okay. And what concretely is it that you are going to have to change in order to lift margins until 2025?
The margin increase is going to come partly from the leverage of growth. That's the main thing, but also from improving our gross margins. Right now, we are negatively affected by the interest rate, the exchange rate changes, of course, but that we are changing gradually now over time. And you can also see when we are entering these large projects in, for example, Belgium and Germany, in the beginning of those large FTTH projects, you will have slightly lower margins or gross margins, mainly because you're releasing a lot of ducts, for example, where our margins are significantly lower than it is with cabinets and products with more higher degree of technology in them. So as that change over time, our gross margin and our operating margins will increase.
Okay. And then if we look perhaps beyond 2025 as well, as you mentioned, the underlying driver of data use, that's not going to stop growing after 2025. So what's your long-term vision for Alcadon? Where are you in 5 years or perhaps even longer than that?
Because as you say, the market's not going to change. It's still going to be a very interesting industry. My view 5-10 years from now is that we are going to be present in more geographical markets. We're going to be significantly larger. We are going to have, over a business cycle, EBITDA margins of above 10%. That's our plan, and we see it's reachable. But overall speaking, we want to be having market-leading positions within all our 3 core segments in all geographical markets. And I think by that time, we have also expanded into new segments within network infrastructure that are very closely related to where we are today. And I also think that with that size that I expect that we reach shortly after 2025, we're going to be more of a specialized serial acquirer or compounder within our niche, have more of a structure like that where we do smaller acquisitions with our own cash flow over time.
Okay. And a final follow-up to that, you mentioned perhaps some new product segments that are adjacent to network infrastructure. Can you give us any sort of teaser on what those might be?
I could definitely. I mean, security or safety products that are closely related to cabling systems, surveillance systems, products like that is something that a lot of our smaller customers, like installers, are buying today, for example. That's an area that is very closely related. But we have other areas within the data center industry also that could be very interesting to venture into.
Okay, that sounds exciting. And with that said, I'd like to thank you for coming here and participating. It's been great to have you.
Thank you very much.